Hi, my name is Emily and I'm going to be your instructor for today's class, Intro to CapIQ, offered by the Margolis Market Information Lab. So to get started, make sure you're looking at the desktop and then go over to the folder located on the left-hand side called Market Lab Resources. Today's class is CapIQ, so open folder number 4, and then Intro to CapIQ, folder 1. You can go ahead and open the slides right here, and then later we'll be working on this CapIQ plugin exercise. Go ahead and open that as well, but we'll set that aside for now. Great. So, like I said, today is Capital IQ Introduction. Let's go ahead and get started. For the agenda, we're going to be going over the overview of CapIQ, the summary sheets of companies, how to CapIQ screen, what are mergers and acquisitions, what is valuation, and lastly, the Excel plugin. Overview of CapIQ. Capital IQ is a leading web and Excel-based financial research database. It offers really robust analytics for company and industry research as well as investment idea generation. It can be used online as a research database or as an Excel plugin. CapIQ has tons and tons of data coverage. There's summary profiles of over 3.3 million companies, fundamental data on around 60,000 public companies, over 700,000 private companies, transaction data on nearly 500,000 global M&A deals, 220,000 private placements, and almost 200,000 public offerings. There's also key professionals data, which covers nearly 2 million executives, boards of directors, and investment professionals. Generally, CapIQ data is used by investment banks, commercial banks, hedge funds, consulting firms, venture capital, private equity, institutional investors, and other corporations. CapIQ has a really intuitive, user-friendly interface. Its research capabilities are generally for industries and markets as well as individual companies, and it's able to aggregate both qualitative and quantitative data, including the most up-to-date market information. It also has charting capabilities. So I'll go ahead right now and show you what CapIQ actually looks like. So if you're going to open it on the web, this is kind of the platform that you'll see. You start out on like My Capital IQ, which just gives you like your profile essentially, and like the latest news in the market. And so up here we have a search bar, and the search bar is very intelligent. So it will autofill what it assumes you're looking for. So for instance, if I wanted to look up Google, the actual name of the company, like the parent company name, is Alphabet Inc. So even though I didn't know that, it's really not a big deal. You don't have to search by tickers or anything. It will automatically assume you know what you're looking for. So you can go ahead and click on Google, and then it'll take you to the tear sheet. And this is essentially like a summary of all the information about Google. So it has business description, the year it was founded, its website, the ticker, and then tons of like market and like transaction and financial data, right? So there's like all the recent stock information, total revenue, EBITDA, EBIT, net income, CapEx, all these different metrics. It tells you all the different indexes it's located on, and then some of the key professionals and key board members. Cool. So CapIQ, this is like obviously one specific company. You can also look in markets. We'll talk about screening a little bit later, and then it also has charting capabilities. Awesome. All right, so like I just showed you, the summary sheet is basically a company profile. It aggregates all the relevant quantitative and qualitative information about the company. It will include reported financials from market data and company filings, and then there's also detailed financial metrics and calculated ratios that are specific to that company's industry available in the Financials and Valuation tab, like I just showed you on Google. So this side over here basically shows you every like different section of information you can look for on Google within CapIQ. So like M&A and private placements is kind of like all the recent transactions the company has been involved in. Quick comps will show you similar companies that CapIQ has decided are comparable to Google. Their estimates, key professionals, and then obviously we went over the tear sheet. Financials and valuation includes income statement, balance sheet, cash flow, different multiples, capitalization, ratios, industry-specific information. So tons and tons of great information available on CapIQ. Within the markets tab, you can also find like summary sheets about markets. So this is aggregating relevant quantitative and qualitative information about industries or markets as a whole. You can see trends about the industry, the geography, or corporate actions, and then it will also include some of like the main companies or players in that specific industry. Great, so now we'll move on to Capital IQ screening. This is really one of the most I'd say useful aspects about CapIQ. So through CapIQ, you can sort and search through the whole database of company data, transactions, professionals, financials, and you can use filters to layer on top of each other to kind of like specify a more defined output. And then once you have kind of filtered all your information down to just the companies or the transactions that you're looking for, you can pull the screenings, and then that can be like used to give a specific like set of companies that you can compare to each other based on the criteria that you set. So in order to go to CapIQ screening, you would go back to this main tab, so up here, but I'll show you in CapIQ, and you'll choose screening, and then you can choose either company or transaction screening depending on what you're going to do. So here, back to CapIQ screening, and the first thing we're going to do is we're going to do company screening. So we'll click on companies. Cool. All right. So you're going to define the screening parameters by selecting from the criteria listed, or you can use the search bar. I generally recommend using the search bar. It's faster. Like the other search bar, it will autofill what it assumes you're thinking of. So it's generally just like more efficient to type it in rather than like click through all the different options. So we can go ahead and do an example. That way you guys can see exactly what it means to screen and how helpful it is. So the screening criteria is we're going to look for companies in the industry classification of textiles, apparel, and luxury goods as their primary listing. The fact that it's primary listing will become more important later, and I'll show you what exactly that means. They're also going to be companies located in the United States, and we want the last 12 months of EBITDA for these companies to be greater than 300 million. So over on our company screening, so just like before I get started into it, this is like all the criteria, right? And if you don't know where what you're looking for is located, right? So like industry classifications, geographic classifications, or locations, that's like pretty obvious in company details, but then like you may not know where exactly the financial information you're looking for is coming from. Like you don't, maybe it's like in estimates, but maybe it's in financial statements. So it's important to like either know where exactly the information you're looking for is coming from, or just go ahead and type it into the search bar. So without further ado, let's go ahead and do the first example. So we want companies in the industry of textiles, apparel, and luxury goods. So we want company details and industry classifications. And then you want to use this button called Open Criterion. So this essentially helps you really narrow down exactly what is going into your search. So for instance, as you can see, you can click on this little plus arrow, and it'll show you what all is really going into textiles, apparel, and luxury goods. So footwear is also in this, right? And if you were looking for companies that don't sell shoes, then you would want to make sure that you unclick this box, click apparel, accessories, and luxury goods and textiles. That way you're not including footwear. But we are willing to include footwear in this search, so we want textiles, apparel, and luxury goods. And then down here it says search by primary industries only. So that's really important. We want to make sure that this box is checked because sometimes companies do things outside of their typical industry, right? So like, for instance, Amazon also sells textiles, apparel, and luxury goods as part of like their huge list of things that they sell, but you would not consider them to be primarily a textile, apparel, and luxury goods platform, right? Like that's not what the company does in general. So they would not be included in this like primary industries only if we're going to search by this. Anyways, so we're going to add the criteria, and then CapIQ will calculate how many companies fit this. So right now there's 54,149 companies listed on CapIQ that are in this particular industry. The next thing that we want to look for is geography within the United States. So company details, geographic locations, United States of America. Open criteria. Good. Make sure that it's only United States, and we're looking for headquarters only. Add the criteria. So now there's only 7,731 companies that fit these. And once you get to a small enough number, CapIQ will start to show you kind of the number or like the actual companies that are listed in this. But 7,731 is still a lot of companies to go through. So we're going to add one more metric to kind of like narrow down our search to make it more reasonable to look through. So the next thing we want is to look for last 12 months of EBITDA. So type in EBITDA, and then we want it from the CapIQ financial statements income statement. Open criterion. It's loading. Okay, great. So we want it to be greater than 300 million. Everything in CapIQ numbers wise is already in millions, so you don't really have to worry about that. It'll remind you, right, like here and anywhere else that there's financial data, but it's always good to keep in mind like it's already in millions, so you don't have to add all the zeros after that. And then we want the time frame to be last 12 months. That's what LTM means. So it's good, last 12 months, and then we're going to add criteria. Great. So we only have 12 companies, which is a much more reasonable number of companies to look through to evaluate further if this is like the types of companies that you were looking for. So Nike, VF Corporation, Tapestry, PVH, Hanes, right? Like these are all like very clear companies that make sense to be in this group. So if you were trying to find a list of comparable companies to like maybe a higher end retailer of manufacturer and retailer of like clothing, this would be a really great start to that list of companies. Hopefully that all makes sense. If you were happy with this, you could go to view results. You just click this right here. And then CapIQ will move all your results over here. And so basically, if you needed to edit the criteria for some reason, you would click this plus, and you could change these. Like you could click edit here, and you could change like the number. Maybe you think that it should be really greater than 500 as opposed to 300, something like that. And then if you're happy with this number or these companies, you can add templates to them. So really good one is basic financial details. You can click go. And then it'll tell you all the information, like all the basic financials about these companies, right? So it gives total enterprise value, market cap, revenue, gross profit, net income, total debt, right? And if you were going to hand this off to your boss, they would be a lot more grateful with all this extra financial data so that they can really like decide whether or not these are the companies they want, as opposed to just the names of the companies and like only the information that you used to screen for them. Cool. And then if you were really ready to send it to your boss or whatever, you could click on this export and you can make it to an Excel. You can click go, and this will, CapIQ will generate an Excel spreadsheet with all of this information together. Cool. All right, so back to the presentation. So the next CapIQ screening is an individual exercise. You can go ahead and practice What I recommend is pausing the video, practicing, trying to see if you can do it on your own, and then starting the video again, and then you can watch me do it, and I'm going to do it right after this. That way you can kind of check your work. Okay? All right, awesome. So hopefully you just practiced, but if not, I'm going to walk you through it anyways. So we're going to do a screening criteria of companies listed on all U.S. exchanges as their primary listing, primary industry classification of bread and bakery products, and latest annual total revenue greater than $700 million. So go to CapIQ. We want to do a new screen, so you can just go to screening, companies, and you start all over. It'll clear your last screen. So first things first, listed on all U.S. exchanges. So we want equity securities, all U.S. exchanges. Click Open Criterion, all U.S. exchanges. And then this criterion is describing just our primary listing. It's really important that we don't choose all listings, and that's just the primary listing, because companies will IPO, and that is their primary listing on an equity exchange, but they can do secondary offerings and things like this on other exchanges. So we want to make sure that it's just the primary listing, because that's generally where the company is headquartered and IPO'd. So unfortunately, CapIQ is being very slow right now. Okay, it worked. Great. So there's 13,385 that are companies primarily listed on all U.S. exchanges. The next thing we want is the industry of bread and bakery products, so company details, industry classifications, open criterion, search by primary industries only. See that bread and bakery products is selected, and then we're going to add the criteria. And then, so there's 24, that's not bad. We're going to add one more kind of criteria to funnel our screen just a little bit more. So we want total revenue. So total revenue, we do not want it from the credit health panel financials and ratios. We want it from the CapIQ financial statements income statement. So the second one, open criterion. We want it to be greater than 700 million, and it should be latest annual. So change this LTM to latest annual. And then add the criteria. Great. So I got 17 companies. This might change a little bit depending on whether or not the financial metrics are changing, just depending on like when you're watching this video. So don't be caught off guard if it's like a slightly different number, right? If you have like 16 or 18. If you're getting a very different number and like your companies are not at all the same, I would check your search, make sure you're doing it the same way that we're doing it. But yeah, cool. So, right, so when this PowerPoint was made, there were 16 available. Now there's 17. Anyways, I walked you through what happens when you click View Results. So then you see all the companies. You can add or display columns by doing the templates. You can edit the criteria, or you can export it to Excel. Awesome, so that's kind of the end of the screening portion on how to use CapIQ for screening. Now we're going to get into mergers and acquisitions. So mergers and acquisitions are significantly influential in the financial markets. Deals of this can range from millions to billions of dollars, and the success of a deal is going to determine the success or the failure of both companies and the management. Mergers and acquisitions at a very high level is when two companies either come together in a merger or one company is taking over another company in an acquisition. And these types of deals have two different types of buyers. So there are financial buyers, which are generally private equity firms that are looking to take over a company for financial gain. And they're also generally doing so on a pretty short time frame, generally like 5 to 7 years, and they're doing so because they think the target company that they're acquiring is undervalued. Another type of buyer is a strategic buyer. These are generally companies that are going to acquire either within the same industry, so it's like a competitor, or they're doing an upstream or downstream acquisition, so you're either acquiring a supplier or a distributor, and for whatever reason you're acquiring this company for strategic reasons. So maybe they have access to new markets, there's synergies available, a growth plan, maybe they have really valuable IP. And so, like I said, you're doing this by firms in similar operating industries, and they are willing to pay a control premium in order to take hold of this firm. So some recent examples of this: Buffalo Wild Wings was acquired by Roark Capital, Sycamore Partners acquired Staples, and then for the strategics, Raytheon and United Technologies was a really big aerospace and defense deal, and then Disney and Marvel Comics. Great, so in addition to financial or strategic reasons, buyers are only acquiring firms for the right price, and that means it's really important to determine a fair valuation for the target firm. There's a couple different ways to determine a valuation. There's the discounted cash flow analysis, which is determining the intrinsic value of the firm based on projected future cash flows. You can look at trading comparables, also known as comparable companies. This is looking for similar firms based on their trading information and applying an implied value to your target firm. And then you can also look at precedent transactions. So precedent transactions is looking at deals that have been done in the past that are similar to your deal for certain characteristics. Like it's either in the same industry, it has really similar like customers for like both the buyer and the target, or you're at a similar price point, similar sort of product. Things of this nature are going to make them like comparable transactions. So the screening examples that we were doing earlier are generally aimed at finding comparable companies to put into this sort of valuation analysis. And then precedent transactions, you could do the same thing when you're going ahead and screening. Instead of doing screening for companies, you would just screen for transactions, and it's kind of all the same criteria. We'll touch on one other criteria in a little bit later in the presentation. So before we get to that, there's this really important understanding. It's really important to understand the difference between enterprise value and equity value. So enterprise value reflects the value of the entire business relevant to all of its stakeholders, which means you don't just only have the ownership rights, which would be equity holders or like stockholders, but you have all the rights, which means you are also a debt holder. So comparatively, equity value is only reflecting the value of the equity relevant to only stockholders, like I said. So enterprise value is equal to the market value of equity plus debt minus cash plus minority interest plus preferred stock. This equation becomes really pretty important as you continue to learn about mergers and acquisitions and like continue to perform these sorts of valuation analyses. But for right now, I think it's just important to understand that there like is a difference between enterprise value and equity value. And kind of like as an investment banker or someone who is doing this sort of analysis, generally what you care about is the enterprise value, the value of the entire business. Awesome. So there's all different types of valuation multiples which attempt to capture a firm's operating and financial characteristics in a single number. And then you can apply this particular financial metric or this particular multiple to a financial metric to yield an equity or an enterprise value. So for example, the value of the whole company is equal to the company's EBITDA times its EBITDA multiple. Some typical enterprise value multiples are enterprise value to EBITDA, enterprise value to EBIT, enterprise value to sales, enterprise value to unlevered free cash flow. And then some equity multiples are like your price to EPS or PE ratio, your equity value to book value, your PEG ratio, or your market cap to net income. It's important to know that understanding of like enterprise value is the whole business, relevant to all stakeholders, and equity is only reflective of the value of equity or its stockholders, because you can't mix and match these like numerators and denominators. So you could never have a ratio of enterprise value to net income, because net income has already taken out your debt holders. So this is essentially comparing oranges to apples. It won't make sense. All right, so into precedent transactions. Similar to comparable companies, you're looking for financial similarities and operational similarities. So size, which can be assumed through revenue, net income, EBITDA. Risk is like leverage or margins. Growth is your PE ratio, projected revenue, etc. And then operational similarities are your industry, geography, products, customers. Right, so you want to look at similar transactions that have occurred in the past in order to figure out an appropriate multiple to imply for your own company's valuation. The valuation results. So generally, precedent transactions are going to have a higher valuation than your comparable companies. It depends on the market, but this is generally because of control premiums and synergies. So essentially, when you take over an entire company, a shareholder is not going to let someone take over their company for the exact same share price, right? Like they would rather hold on to it or sell it on the stock market. It doesn't make sense to give up their control. So you're, as someone who's acquiring a whole business, you generally have to pay like around like a 20% premium, right? Sometimes more, sometimes less, it just depends, but you have to pay a premium. And then for synergies, a lot of times strategic companies will acquire a business with a certain plan in mind as to how they can realize gains from the sale. And so this is like what's called synergies, and you may pay an upfront premium in order to recognize those synergies. Like I said, it depends on the market conditions. Another thing to note about precedent transaction analysis is it's really important to keep time as a factor. Kind of going back to this previous slide about the criteria to consider, you want to know, like you want to consider all of these like financial similarities and operational similarities, but also time, because comparing deals from like the 2007-2008 market crash to like a time when like the market is booming, those are not similar multiples, right? Like companies just aren't being valued the same way. So you only want to go back in time around like 3 to 5 years max. All right, and then remember, comparables, whether they're companies or transactions, are rarely perfect. Two factors that are not the same do not make the comparison irrelevant. So just remember, like, valuation is an art, not a science. Sometimes it's really hard to find good comps or good precedents, and then sometimes you may have to widen your search or kind of like think about your target company in a different angle in order to get some companies or transactions that can tell the story that you're expecting to tell about how to value your target. Awesome, so we'll move into the valuation section. So this is kind of a screening scenario we have kind of prompted you with. So to set the scene, you're an associate at a leading private equity fund in Chicago, and the VP has asked you to value a potential acquisition. The offering memorandum states that it's a food products company, has an EBITDA of $10 million, and it has major facilities in Toronto and Atlanta. Using precedent transactions, value the acquisition target. Okay? So you want to build the screen. First things first, you set up your screening criteria. It's a merger or acquisition. It's located in the US or Canada. It's primarily in the food products industry. The transaction has closed within the last 12 months, and the target EBITDA at the deal announcement is between $10 million and $100 million. So go ahead, pause the video, do this initial screen, and then come back click play, we'll talk through it together. Alright, so hopefully you paused and did it, but if you didn't, we'll talk through it. So we're going to go to screening, and we want transactions. So first things first, it's a merger and acquisition. So general transaction details, transaction types. So merger and acquisition, add the criteria. Then second, the geography is in the United States and Canada. So company details, geographic locations, good, US and Canada, add the criteria. Next thing is food products industry. Company details, industry classifications, open criterion, primary industries only, add the criteria. Next, transaction close date. Open criteria. We want it within the last 12 months. Add the criteria. And then we want total revenue, or sorry, EBITDA, transaction valuations, all transactions, target issuer LTM financials at announcement. This means the LTM of the company when the deal was announced. We want it to be EBITDA between, so change this to between 10 million and 100 million. Cool. Add criteria. Okay, so there's 0, right? That means that whatever we did in our screening, it was too narrow. And if we go back to the PowerPoint presentation, but it'll show you, the reason it's too narrow is this last 12 months. So deals don't happen all that frequently. They happen frequently, but you can't always guarantee it's going to be within the last 12 months. So the results didn't yield a sufficient set. We want to realize that the initial time range was too narrow, so we're going to change the close date to include the last 3 years. So we're going to go ahead and edit this, change it from last 12 months to last 3 years, update, and now we have 9 deals, which is awesome. 9 is a very good number in terms of figuring out food products companies closing within the last 3 years that are in the US and Canada. Cool. So, like I said before, we can edit the display columns to customize the results, display more information without changing the initial screen. This is when you go from here to view results, and then you can add added display columns, right? So you can change these, add more, whatever you want. And then the template for display can also be used merger acquisition details, which is similar to like the basic financial one that I showed you earlier. It will just give you a lot of publicly available information about the nature of the deal. And it's really useful in analyzing the relevance of one of these transactions to the set. All right, so last thing we have to do is the Excel plugin. So go ahead, make sure that you have that Excel file I showed you earlier opened up, let it load so we can practice together, but we'll go through the last few slides and then I'll jump over to the Excel and kind of walk you guys through it. So the plugin allows you to access CapIQ data in Excel, and basically it allows you to use the most up-to-date financial market and company information available, and it helps us build more dynamic Excel models. You can build comparable sets directly within Excel, so either like comparable companies or precedent transactions, and the purpose of comparable set is to directly compare firms and any relevant financial metrics. So having the most up-to-date information is always good. The way we're going to access this is S&P Capital IQ will show up in your ribbon, and then you're going to use the formula builder. And then CapIQ formulas use company tickers or CapIQ IDs to identify company information. So it's just important to note, if you're doing transactions, there's an IQTR code that's associated with every transaction, and that will allow you to access the deal through the formula builder, and it'll pull in the right information. You can search for CapIQ information throughout all these folders, or you can use the data item keyword, and this is kind of like your search bar that you have also in the web platform. Then once you have whatever you need, you can like edit the information relevant to it, add the formula, and then you click apply to spreadsheet, and it'll populate the Excel with that information directly. All right, so that is the end of today's PowerPoint. We're going to jump to the Excel and we'll see how it goes. So as you can see in my ribbon up here, we have S&P CapIQ, so click on that. It's important to note, if you're going to use the formula builder, you cannot be clicked in a cell. So like if you have a cursor where you can type, you can see that little bar, that means that it won't work. So you need to click out, just hover over it. It has to be selected but not being able to type in it. You're going to click formula builder. So you will probably get please close all other S&P CapIQ forms before proceeding. This is an awesome glitch. All you need to do is open a new one. So open a blank worksheet. Don't do anything with it, just close it. And then click Formula Builder again. There we go. So now it's going to work. All right, so for our Formula Builder, this is what it looks like. Like I said, this is where all the information is, or you can use the data item keyword, edit your information. This is kind of like your open criterion, sort of, and then it'll show up here. You'll add the formula, and then you'll click apply. So for the first thing we want to do, we are going to be referencing the cell. So click this button so you can click a cell, and we want to reference this ticker, PEP, so this is going to be Pepsi because we're valuing Coca-Cola. A8, click back out of that. And then we want to know, so we were clicked in here, right? This is where the formula is actually going to go, so we want company name. So IQ company name, great. Then we're gonna add the formula, so that's all we need. This formula layout says it's going to go across a row, which is really convenient for us because we can just go ahead and continue to click or kind of file in all these other aspects that we want to know about Pepsi, and then we don't have to do anything. Like we'll just keep adding the formulas, and then we can click apply all at once and it'll file all of it in. Okay? So we did the company name. The next thing we want to know is the share price, which is also known as day close price. So we're still referencing cell A8, which is good because we want it to be Pepsi's day close price. And then we're going to do as of date cell. Make sure that it's referencing this, which is a date function. So every time you open it up, it will show you the most up-to-date information. Then we're going to add that formula. See? So they're going to go across row company name and then share price. Next thing we want is our market capitalization. So go back up to your data item keyword, market capitalization. Great. Same thing. It's still Pepsi and it's still as of the current day of the spreadsheet being opened. Add that formula. Then we want enterprise value. Great. Add formula. LTM revenue. So do IQ revenues. And then we want relative period LTM. And then as of this date. I guess it doesn't really matter because it's LTM. So just add the formula. There we go. IQ revenue LTM. And then we're going to do EBITDA. This one. LTM. So I shrank this a little bit, but I'll stretch it out for you guys. Relative period LTM, still referring to Pepsi. Add the formula. We want EBIT. Same thing. Relative period, Pepsi. Add the formula. NTM revenue is a pain to find because it's in estimates and you can't search for it. So we're going to go to estimates, this tab, go to CapIQ estimates, consensus estimates, and then scroll down and you just have to find it. So revenue is right here. IQ NTM, add that formula, and then the next thing we want is NTM EBITDA. NTM, add that formula. There we go. So we have all of our formulas, and they're going to be across the row. So we're going to click apply, close out of our formula builder, and as you can see, everything has been filled in. So you can shift highlight over all of this information, Control C, shift arrow down, and then we're going to special paste it, and we want the formulas. Okay, so unfortunately, when I did this, I did not lock this cell. So for the share price, the market cap, and the enterprise value, we need to lock A4. And then just go over these three again because they refer to A4. Control C, all the way down, special paste that formula again. There we go. So now it's showing us all the information related to Pepsi, National Beverage Corp, Keurig Dr. Pepper, Monster, and then Fomento Económico Mexicano. I don't speak Spanish, so I hope I didn't say that too horribly wrong, but a Mexican beverage company. And it's telling us all of their financial data, and then we have all the relevant multiples here, and then it's filled in down here for us very nicely. So this company, LTM EBITDA and NTM EBITDA, this is like for Coke. So basically like applying these metrics to these numbers, and then we can see based on our comps, our median value is between 184 billion basically to 180 billion, because all this is in millions. So yeah, that's that on the comparable companies. Then we'll move on to the M&A comps. So this is our transactions. So we're going to use the formula builder again. Click on formula builder, make sure you're hovering. These are the IQ TR codes I was telling you guys about. So we're going to be referencing these instead of tickers, which is fine. And then the first thing we want to go to is transactions. So date announced is going to be general transaction details. It's this announce filing date. And we're just going to add the formula. Parent co is like the buyer investor name. The target co is the seller name. And then enterprise value is going to be total, actually it's not total transaction value, it is in your M&A, and then current final multiples, so implied enterprise value is this enterprise value one. Add the formula, and then the next things that we want, these LTM revenue, LTM EBITDA, LTM EBIT is your target LTM financials. So you have to scroll down to find that. This is very finicky. It's okay. All right, so LTM revenue at announcement. These are all LTM, just as a note. So total revenue at announcement, add the formula. Then we want EBITDA at announcement, add the formula, and EBIT at announcement, add the formula. Okay, we're still doing across a row, so you should have all of those done. It's the transaction date, buyer name, seller name, implied enterprise value, total revenue, EBITDA, and EBIT. Click apply. Close out of this. Great. So then we're going to shift arrow over, copy all those, Control C, shift arrow down to highlight our whole section, paste special formulas, and then this is going to refresh and be referencing these different transactions. So now we have all the different like transactions that we thought were relevant and their metrics. And then we're going to calculate the enterprise value based on the company, so Coca-Cola's company LTM EBITDA. And so for our median EV to LTM EBITDA, looks like they're about 13.4 times. So this puts our valuation right about 160 billion. So it's a little bit less than the comps. Not like particularly sure why. Maybe just the comps are trading well right now because they're all like kind of consumer staples, and like beverage companies don't generally, they're like not particularly cyclical. I don't know. Anyways, so but that's the gist of like using the CapIQ plugin on Excel. I hope you guys learned a lot throughout this class, and thanks for watching. If you have any questions, stop by the Margolis Market Information Lab. There's always people to help you guys out. We're all happy to answer. But yeah, that's all for today. So thank you guys for joining me, and hopefully I will see you guys again sometime. Awesome.